General Motors announced recently that they're going to shut down their Cruise division, or at least the autonomous driving piece of it. Now, this is one of the stocks that I have been very bullish on for quite a while. About the last year and a half, I've been building a position in General Motors. That's done extremely well. Shares are up around 100% over about the past year. But after this news was announced, and this was last week, I sold all of my shares of GM stock. I have gotten completely out because this completely changes the thesis in the company. General Motors is a stock that I thought, you know what, you have a great foundational business. I think this is one of the best run automakers in the world. And then the optionality, the asymmetric potential for General Motors stock was Cruise. Now that asymmetry, that potential for the business is simply gone. They shut down the business that I thought had potentially $1 trillion worth of potential. So today I want to go through exactly what they announced and how this changes the dynamics of the industry, because I think where we're going based on all the announcements that we've seen in the industry is we basically have Waymo's strategy of building out this autonomous fleet. That's essentially what Cruise was going to do. Then you have Tesla's strategy, sort of similar to that, but with people owning individual vehicles. We don't know exactly when their technology is going to launch, when that fleet is actually going to be something we're going to be able to use for ride sharing. So that's many more questions around that. But then everyone else, every other OEM in the auto industry has at least a plan to get to level 4 or level 5 autonomy. That means that autonomy itself may be a commodity, just like vehicles. In that world, I don't see what differentiation General Motors has over maybe being a slightly better manufacturer than some of its competitors. I think it is that, but that's not a stock that I want to own. That's not an asymmetric potential stock. So going to dig through all this today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go to what GM officially announced, because I think this puts the things into a bit of context. This is the official announcement from GM. GM plans to realign its autonomous driving strategy and prioritize development of advanced driver assistance systems on a path to fully autonomous personal vehicles. This is the key. GM is now focused on fully autonomous personal vehicles. So this is similar to what a lot of automakers are moving towards right now is, okay, we're going to sell you a vehicle, and then we're also going to sell you some sort of autonomous features, likely in some sort of a software as a service, kind of a subscription. And that's where they think the money is going to be long term. So basically people will pay to not drive their cars. I got a lot of questions about whether this is going to be a viable strategy, but that's what GM is going with. So they're going to build on their progress of Super Cruise. That's the initial version. It's a level 2 autonomous system, basically like FSD, not quite as capable as FSD, but you can take your hands off the steering wheel, but your eyes need to be on the road because you need to be able to take control at any moment. So GM is going to no longer fund Cruise's robotaxi development, and that's because of the considerable time and resources that it would take to get that to market. Now, here are the comments from Mary Barra. I think these are telling. GM is committed to delivering the best driving experience for our customers in a disciplined and capital efficient manner. Capital efficient. These are the red flags that should be going off in your head if you're investing in a disruptive company. If you're disrupting transportation as we know it, not going to be very capital efficient, especially for the first few years, maybe even the first decade. Cruise is an early innovator, deeper integration with our teams, paired with GM's strong brand scale and manufacturing strength will help our vision of the future of transportation. So basically, they're going to take all this investment that they had in Cruise and incorporate it somehow. We don't know exactly what the details of that look like into the autonomous efforts that are going on with Super Cruise. They do have agreements with other stakeholders to raise their ownership to 97%, and they're going to work to buy the rest of those operations as well. This is going to lower spending by $1 billion annually, and that's going to be done by basically the beginning or middle of 2025. So things are going to happen pretty quickly. But you can see that GM is focused on being more capital efficient, buying back more stock. I think that's likely what they're going to do with this, and not invest in the future disruptions of autonomous driving. I think that's really the key takeaway. And this really changes the playing field in the entire industry. And that's really why I made this move. That's why I sold shares, is I see this now as no longer being a visionary company trying to disrupt transportation as we know it. This is a company that's just trying to offer the same autonomous driving experience you're going to get from every other automaker. And that's where we're moving to, is that you're going to be able to buy fully autonomous personal vehicles. If that's available from everybody, It's going to be like an airbag. It's just going to be something that you're going to expect to have on your vehicle. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So how does this industry play out now, and who am I investing in instead of investing in GM and Cruise? Well, I think what we're seeing is that autonomy itself is going to be offered by a whole bunch of different companies. So Ford, General Motors, Volkswagen, BMW, Audi, all manufacturers basically have a plan to get to level 3 and then ultimately at least level 4 autonomy. So in that world, is everybody going to build their own autonomous driving system? Is there going to be modules that basically can be built across the industry and just be plugged into everybody's vehicles? I think that's likely the case. There will be some modularity. In that case, a company like Mobileye is going to be one of the winners in the market. This is a company that I've been investing in since last summer, and I think it is ultimately going to be one of the winners if there is dozens of manufacturers and dozens of vehicles that are fully autonomous capable. The other place we'll likely see value in the market is aggregating this ride-sharing demand. So Uber won the business when it was human drivers. And the advantage for Uber's business is it was a two-sided business. They're aggregating a lot of demand for ride-sharing, and they had the most supply. So they were able to extract the most value because their job is to connect supply with demand. If you have the most riders, you're going to attract the most drivers. If you have the most drivers, you're going to attract the most riders. So there's a flywheel effect that goes on in that business. Is that going to be the same in autonomy? Possibly. And it's very possible that Uber is again one of the winners. I think the potential market could be another 10x bigger than what Uber's market is today. So that is a stock that I did buy some of last week. But the other player that has a really interesting position and potentially much more asymmetric potential from an investment perspective is Lyft. Lyft is essentially the exact same thing as Uber. They're not global. They're going to be just in the US and Canada, but they're going to be connecting riders with drivers. Now, those drivers are potentially going to be fully autonomous. Lyft has a much easier path towards fully autonomous vehicles because they have a much smaller business. They're a much more desperate company. So Uber is going to have to work with millions of drivers and basically not make them angry while also getting autonomous vehicles on the road. That's a delicate balance that they're going to have. Lyft could essentially say, you know what? In Phoenix, we're going to eliminate all drivers from the Lyft network, and we're going to go fully autonomous. Tomorrow, we're going to do that with 1,000 vehicles. We're going to flood the market with supply. That is potentially a path for them to bring much more supply to the market and be an aggregator of demand. I don't know if that's going to happen, but that's where, as investors, we're taking risks that this is going to be a 10x or a 100x potential for a company that has a market cap of $5 to $6 billion. I think that's a pretty good risk to take as an investor. So those are the 3 stocks that I think are much better positioned if we're going to move to a world where all OEMs are going to make some sort of autonomous vehicle that has level 4 or level 5 autonomy. The other company that I think is in a much more challenging position, if that's the case, is going to be Tesla. Tesla doesn't actually have a level 3, level 4, or level 5 product on the road today. We don't know when that's going to happen, but now we know that other OEMs are on a path to getting to full autonomy and selling that fully autonomous vehicle to customers. If they get there before Tesla, I think that would be really devastating to the potential value creation that FSD has for Tesla. So something to think about if we're going to have dozens of fully autonomous vehicles on the road. It's not just going to be Tesla. There's going to be tons of other automakers as well. So that's the way that I'm looking at the industry today. This is an ever-evolving industry. So my thoughts are going to change as the facts change on the ground. But those are the moves that I made last week. Sold GM and acquired shares of Mobileye, Lyft, and Uber, because I think, at least on an incremental basis, they all look a little bit better today than they did just a couple of weeks ago. But let me know what you think in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.